I'm reading this Reuters piece. EU must impose sanctions on Russian oil. Ministers tell divided bloc. In other words, do you think the prospect of their possible blocking of Russian barrels is partly what's driving crude this morning, or is there something else going on?
It's certainly that. I mean, it's becoming a real possibility. And given the heinous acts by Russia against Ukraine, it's almost impossible to see from a moral perspective how they don't do it at some point, the EU blocking those barrels. But obviously that Houthi rebel attack certainly raised shackles in the market about that being an ongoing concern. But as I alluded to before, the Saudis and the UAE, for that matter, United Arab Emirates, are playing a very strange game here. They're almost playing a footsie with Russia. They haven't come out at all against Russia regarding the Ukraine war. They are not, at this point, acting to put more oil on the market when both of those countries have some significant spare capacity that they could easily tap. So once again, Saudi Arabia not exactly being our good friends that they claim to be. Once again, I've always had a problem with them over the years, and here we go again with that. So that's what's building into this market. I would argue that the price reaction, Kelly, has been measured, and as things look really, really bad with the Ukraine war, you see that price surge. When things calm down, or there's like even a glimmer of hope for a resolution of this thing, they come down hard.
But it's interesting that for as frustrating as the Saudis can be, the other options on the table are Venezuela, Iran, which, to the point about the Houthi attack, the last couple of headlines, whether it was the reported Iranian firing of missiles into Iraq near our consulate building there, whether it's the Houthi attack here in Saudi Arabia, this is a strange time to see, an increase in tensions when we were on the brink, it sounds like, of figuring out the nuclear deal and trying to get Iranian barrels back into the market. Is that also what's coming out or back into the price here?
Well, no doubt. I mean, the Iranians are beside themselves, which I think is partly what's driving these new attacks by both. The Houthis are Iranian-backed. Let's not make any mistake about that. So that's Iran, too. But, with the Russians now saying that holding us all up on this deal, wanting their dealings with Iran not to be affected, which the State Department said wouldn't be under the deal, they're holding it up. So now those barrels, those Iranian barrels, which the market was counting on, the oil market, and we saw some sell-off on a near inking of the deal just 2 weeks ago, is certainly a factor again. That's also what's helping to push these prices higher. This market needs more supply from somewhere, whether it's the Iranians, some of those Venezuelan barrels, a stabilization in Libya. Any of those things would sort of help and keep a lid on prices. But to the extent we're not going to get any of that, and then we go and foreclose Russian supplies to Europe, you're back into the worst case scenario for pricing here, and 110 will go through that like a hot knife through butter potentially.
Shepard Smith here. Thanks for watching CNBC on YouTube.